Welcome to your AML Suspicious Activity Reporting. This is also known as Do the Right Thing or Comply with the Law. I'm Jeannie Delamier. I'm the Chief Compliance Officer for the company.
And I'm Christina Griswold, a Compliance Specialist.
And we're going to take you through your required annual training. Anti-money laundering and the mortgage fraud compliance program is what we're going to be talking about today. And the biggest thing that we want you to remember is that it's every employee's responsibility to pay attention to red flags and potential fraud and to report it. So let's talk about the regulations. These nice little initials here, SAR and BSA, you're going to learn what those mean if you don't already know. So what is it?
The Treasury Department has the authority granted by the Bank Secrecy Act, notice it's in bold, to prohibit and actively prevent money laundering and any activity that facilitates money laundering or the funding of terrorists or criminal activity through the use of money laundering or any type of mortgage fraud.
And that any type of mortgage fraud is a fairly recent add. It wasn't originally there because people didn't think about what mortgage fraud was. So Bank Secrecy Act is something you need to remember, or BSA, and it's not Boy Scouts of America, guys. So how did it start? Well, back in 1970, we had a lot of problems with organized crime. People were very much afraid of the mafia and the Cosa Nostra and all of that stuff. And so the original started as, well, let's follow the money and figure out where it's going. Back in 1970, Congress enacted that Bank Secrecy Act, and the intent and the purpose was very clear, and that was to stop illegal gains and deposits. And it was aimed, as I said, mostly at money laundering and organized crime. The original requirement was for banks and thrifts to report any large deposits of $10,000 or more. And, oops, we just got somebody else, I think. Maybe not. Following the events of 9/11, enforcement and expectations changed a lot. Along with the exposure of risks and threats of money laundering, now we were looking at terrorist financing and many new types of financial crimes. So they keep changing the rules, and reporting requirements have been changed with more things to add as our type of economy and the threats that are evident in our world change. So anybody who worked in a bank back in the late 70s and 80s and 90s and even more current is probably used to having to potentially fill out a SAR report. And that was originally a horrible 5-part carbon thing that was a real mess. Now it's electronic. But the idea was to report any large deposits originally to fight money laundering. So you'd get a lot of people coming in trying to deposit $9,990, hoping that they would avoid that. However, if they also went and made a similar deposit in another branch, lo and behold, it would get aggregated and put together and still reported. So that was the issue with that. And Ray, I see you joined us. Good, thanks. So money laundering. Money laundering is generally defined as, here's the official one,
any act designed to conceal or disguise the true origin of criminally derived proceeds so that the unlawful, those monies that were laundered, proceeds appear to be legitimate assets from legitimate sources. Again, this was all intended to prevent organized crime, but now money laundering can also support terrorism by allowing funds to be directed to terrorist organizations.
Reporting was expanded beyond the banks. In August of 2012, non-banks like us, mortgage companies, among some other entities, were added to the list of companies who are required to participate in report and complete SARs. And mortgage fraud, having, unless you've had your head really firmly hidden somewhere for the last 10 years, mortgage fraud has become something of a national epidemic. So that was actually added as a separate reportable suspicious activity. It used to just be there as other, and now it's there as an actual separate category. Mortgage fraud is actually defined as any act that is undertaken to encourage or induce a lender to make a loan when the lender would likely not have made the loan had the true facts been known. If you think about that, If somebody is acting as a straw buyer, in other words, they're buying but they aren't the real lender, that's something that we want to make sure that person who is going to be occupying the property or actually is the real borrower, we want to make sure they're qualified, not somebody else who is acting as the buyer. And that's one example. So mortgage fraud also includes the act of anyone who has an interest in ensuring the loan is made. And that includes this whole list of people as well as some other fun people, like
we can't exclude title companies, appraisers, basically anybody that stands to benefit from a loan funding can be considered someone suspicious if they're doing something to instill some sort of fraud.
So for people in the branches, that includes processors, branch managers, loan originators, anybody that's involved in it, because all of you have an interest in making sure the loan is made. You get paid when it's made. We like making loans. We just want to make good quality loans. And obviously what we don't want is people doing things that would induce us as a lender to make a loan when if we knew the real case, we wouldn't do it. So what is suspicious activity? Suspicious activity refers to issues with or documentation related to any party in the transaction. And it can include a whole bunch of things.
It can include identity, assets, income, and any other activity of a suspicious nature in connection with prospective or actual business in connection with a loan. So keep in mind, it doesn't necessarily have to be loan documents that are suspicious. It can be someone who presents the loan documents or someone that's involved in the transaction that has other issues that we consider suspicious.
I'm going to stop for just a moment, and I'll be unmuting you in just a moment. We do have a couple people that have joined us, Lori and Ray and Maria. We see that you're on. And when I unmute, I do need to remind you we are recording at this point, but I will need to know if there's anybody else with you so that they get credited properly for this. What I would like you all to do, those of you that have signed in, is in the chat box, type in SAR, S-A-R, just to let me know that you're actually listening. We do that every so often, make sure everybody's there and paying attention, and I'm seeing stuff flowing in. Thanks. I'm going to unmute for just a moment, see if anybody has any questions. Okay, you are unmuted. Does anybody have any questions for us at this point?
Actually, Janie, I do. This is Arch. What is the limit that they report now? It used to be $10,000. What is it now?
It did. It's down to $5,000, and that's actually on a later slide, but that's okay that you asked. There are a lot more. They've tightened it up a lot, and in fact, you can report less than that if you have a pretty good handle that there's a problem. So, but that's the actual idea, is it's set at if it would be a loss or a potential fraud that is $5,000 or more. And if you think about it from our mortgage standpoint, everything we do is over $5,000, so it always qualifies. Good question, Arch. Any other questions?
Is there anyone out there that is not listed on our attendee, meaning somebody who's partnered up with somebody who's signed in?
Okay.
Yes, I'm on the call, but I can't get my computer to download the online meeting software. It's still working. This is Gary in Melbourne, Florida.
Gary, what's your last name?
Bowie, B-O-W-I-E.
Thank you. Anybody else that's on? And Gary will be sending this presentation to you, so don't worry about it. It will also be posted on the web. Alrighty, I'm going to mute, and thanks for letting us know you're on. Okay, you all should be muted again, and we're going to continue with the training. So some examples of possible mortgage red flags. And a lot of these, you see them at the branch long before we would ever see them here at corporate. So it's really important that you and your entire staff is aware of finding these. First one is that the true source of funds may be disguised. And this is particularly sensitive when it comes to gifts, and it's why we're so careful with identifying where gifts come from. And obviously the biggest problem with that, there's a twofold problem. One, if the borrower borrows the money for that and then tries to disguise it as a gift, they've got an additional liability out there that we don't know about that basically can impact their ability to pay back the mortgage. So that's a problem from an underwriting standpoint, and also from an honesty standpoint as far as where those funds came from. Well, what happens if those are actually laundered funds and we don't know where they're from? You know, that's why we don't accept mattress money and that sort of thing. If we can't identify where the funds come from, that could be laundering money. And so that's why it's important to really determine the source of funds. And when you see underwriters asking for that, now you understand why it's so important.
Signatures that are not genuine is another red flag. Sometimes we have people that sign for other people thinking they're just going to be able to push the application along and push the documents along. It's not acceptable to have somebody sign for someone else. What's also not acceptable is one specific borrower who varies their signature, I guess, depending on their mood, if you will. They need to make sure their signatures are consistent throughout the file. If they use their middle initial, they need to always use their middle initial. If they sign their name out in full, then they must do that consistently throughout the documentation.
And a lot of that has to do with you truly identifying who your borrower is, and we'll talk about that again in a little later. The next two items are kind of related. Made up or inaccurate income or employment history, and created tax returns, which frequently goes hand in hand with that. You would think that this couldn't happen anymore, but it still does, or people try to. And if you find it happening, that's something that would need to be reported to us. One of the things, for example, that frequently happens with inaccurate employment or employment history is when you have people that work for a family-owned business, and perhaps they don't make as much money as they would need to qualify, and so all of a sudden they're making more money, but you're not seeing the history of it. And that's very difficult to be able to quantify because of it being a family-owned business, so there are some specific things around it. Another thing sometimes connected with that is created tax returns, and particularly amended tax returns, which is something we're seeing a lot of lately. And when I say we, that's as an industry. But we've seen a couple here as well where people really would not qualify based on their initial tax returns, and lo and behold, they amend them and refile them with enough that, whoa, now they actually qualify. And because they do that perhaps a month before applying, when we send a 4506, we actually can get a verification that shows, yeah, they appear to qualify and this matches their amended tax returns. The problem with that is that after the loan is closed, they re-amend the tax returns back to what it originally was, and they really don't qualify. Not only is that not doing anybody a favor if they can't really qualify for the loan because it places them in a potential loss situation where they could lose their home, and that's not any good for anybody. Look at the last few years and all the problems that caused. But it also creates misrepresentation in the loan file and creates a potential repurchase for us. So be very careful that that does not happen. And what we do see sometimes in the industry is loan officers who are coaching their borrowers to, hey, you don't make enough to qualify, amend your tax returns and then we'll talk to you in a month. And the reason we can tell that's happening sometimes is the original credit report was pulled a few days before they amended their tax returns. If we see that, the loan will not be approved for that reason. So that's something to really look at and make sure if you're a manager that you're discussing with your MLOs that that's not acceptable.
We have three that are related. We have leaving out pertinent information, removing or ignoring received documentation, and altered documentation. This begins with the branches. We don't know what has been left out or what has been ignored because we get what we're provided. And everything we receive is stored in a permanent file. If it's not labeled as necessary, it is in the recycle bin. So we're relying on you to make sure that we see everything that you've seen, and really basically cannot leave out any pertinent information that would affect the borrower's ability to qualify. If anyone asks you, do you really need that? Because I know that's going to be a problem if they see it. And if they don't see it, then they won't know about it. You can't do that. You also can't remove something that you know would impact the decision on the loan. And you can ignore information that's been presented to you and decide, you know, we don't need this. It doesn't matter. That's the decision for the underwriter to make. Lastly, altered documentation. One of the common things people do is when there's a shared bank statement, someone's not on the loan, so they don't think they need to be named on the bank statement, so you will see borrower Jones, a big blank, and then the address. Typically what that is that's someone being removed from the bank statement as a title holder, and as you all know, all they need to do is let us know that the person borrowing has access to that account, 100% access. So we have to have all the information as it is intended to be presented.
Yeah. And sometimes when that happens, it's because they don't want us to see the other person's name that's on the bank statement. And unfortunately, you know, it is what it is. We've got to look at ResMac's best interest, and we expect you to do that as well. There's two left on here. Valuation misrepresentation. Well, we don't see it too much anymore. That's the old, hey, we need the appraisal to come back with this value in order to make this work. Well, there's a lot of appraiser independence rules in there now, and have been for a while, but surprisingly, there's still the ability, or we still see that happening sometimes. More than our own folks doing this is frequently the realtor who, you know, maybe meets the appraiser at the property and begins to pressure them to, you know, hit a certain value. You know, and if you hear of that happening, that's an appropriate time to, you know, have that discussion with the realtor that you can't do that. I hear it from the appraisers occasionally, and we can send a reprimand letter through to the Realtors Association if we need to, if that happens. So, you know, they need to be aware of it. Sometimes they don't even think about what they're doing, I think, but it still happens. And then occupancy misrepresentation, which I was at Fannie up in D.C. in the middle of July, and they said at the time that occupancy misrepresentation is their #1 fraud that they are running into currently. And particularly, it is in connection with, well, I'm buying a second home. And guess what? It's really an investment property. Or they're buying it for a family member, and they're acting as a straw buyer. You know, there's nothing wrong with buying an investment property and letting your family live in it. That's fine if you want to do that. But be honest about it that it's an investment property. Of course, the reason they want it to be a second home is the rates are better and the prices are better, so we understand that. But there is a lot of misrepresentation. The way that Fannie is handling it, by the way, for us as a lender, if it meets qualifications otherwise, what they will do is simply charge us back with the difference between what it was priced at and what it should have been priced at. And guess what? We don't get to go back to the borrower at that point. Anyway, so those are some examples of possible red flags. Believe me, it's not all of them, and people get tremendously creative in coming up with new fraud ideas. As soon as you beat one down, two more pop up. But this is probably the most common categories, and we need your help at the branch to keep at the branches and in the production community to keep an eye out for this. So how to combat potential fraud?
You want to know your customer. Very key in preventing fraud. You always confirm the identity of all the borrowers. You make sure the names, the accounts, the identification, the credit, any kind of documentation you see, you make sure it all matches. If there's any aliases or name variations, you want to take note of those and respond to them accordingly. You check the GSA and the LDP lists. The verifications must also be completed utilizing the 4506 and the SSA forms. We also utilize the credit reports to look at name variations and address variations, different addresses, and we also check the OFAC list to make sure they are not on the do not lend to category.
Right. And if there is somebody on the OFAC list that needs to be referred to compliance if you cannot clear it. If it's an obvious mismatch, that's one thing. I had one some years ago where the person's name was like George David, and it actually matched the name of a boat, believe it or not, a ship, that was registered to Libya and was therefore on the do not allow into a U.S. port list and therefore hit on the OFAC list. And that's kind of funny if you think about it, but we still had to look at it and make sure, okay, he's not a boat, he passes. Anyway, so there's a lot of things that we look at. The other way to combat potential fraud is to always pay attention to those red flags we just talked about. Be on the alert for suspicious activity. One thing that happens sometimes, if the customer gives conflicting information, pay attention. And this is mostly either a loan officer or a processor that might hear this, where you get one story one day and the next day it's radically different. That might be a, hey, wait a minute, you told me this yesterday type of moment. Check for consistency. The entire loan should make sense. If it doesn't, if your senses are going off that something's wrong, you're probably correct. Check all the documents for validity. Make sure you've got all the pages, that the copies are accurate, that they're not turned sideways. You know, we'd have an issue with you and basically stop it when it comes in here if that were to happen anyway. But the other thing to check for is, you know, spaces in the documents, font changes, that kind of thing. People still do really creative things or try to, and with desktop publishing, it's so easy to do that nowadays. So we always try to double check on things. If a document appears altered, that needs to be referred to compliance.
So what if you suspect something? If you detect any suspicious or red flag, review it carefully and try to confirm concerns. Sometimes you're just having one of those days where things aren't looking, you know, the way they should. Move to another file or go take a quick break, come back to it, and if it still looks suspicious, proceed to do some research on it. You may also want to confirm with your supervisor if you're not sure. We have to add the caveat, but not if you think they're involved.
We've actually had that happen. So if you suspect your supervisor's involved, your manager's involved, please don't go to them. Come to us. We're happy to help you. And if you are sure of something or you're still suspicious and you can't resolve the concerns, that's the time to contact compliance or contact the compliance officer for assistance. So this is the time where I ask all of you to type something else in there. And I haven't told you this, but I want you all to guess. Who do you think the official compliance officer for ResMac is? You just type the answer into the type box. Yep, you're getting it. Okay, I'm seeing some people typing yes. Now, I do need to tell you that, Joe, you don't know, shame on you, it's me. But that's okay, that's why we're here training you. The compliance officer is actually a designated person as part of the suspicious activity plan. And even though I'm the chief compliance officer, it's actually a separate position. It happens that I do handle both of them. But a compliance officer is the person that does the reporting, does the SAR reporting. And because it's a very private thing, it has to be different. Gary, it's actually not Nelson Hawes, believe it or not. He does a lot of stuff here, that isn't it? Anyway, so now you know the answer to that, and I know you're on. So, a couple of things we want to talk about. First of all, remind you that managers and employees, everybody is responsible for reporting any suspicious issues or items noted during the processing of loan applications to compliance. So if you aren't able to resolve it and you're still suspicious or you've confirmed that there's a problem, we need to know about that. We'll research it additionally, and if we confirm it's a problem, not only will the loan not be closed unless it's a separate issue and we're still able to close the loan and deal with the suspicious item offline, but there's also some other steps that we have to take.
We do want to caution you that we do not share or report SAR or FinCEN filings.
You may not tell a borrower that they've been or may be reported.
And if we do decline a file and there is a suspicious reporting done, you will not know it, and it is not cited as one of the reasons.
So a SAR is a suspicious activity report, and we'll show you some other stuff about it. These are filed electronically with FinCEN and that's part of the U.S. Treasury Financial Center, and they're filed by the compliance officer. They're tracked, and they're tracked electronically in FinCEN. I can go out and look at them at any time, and they may be investigated by the FBI. The reason I say may is we never really know if they investigate them or not. Just like if you tell me that there's a problem, you're never going to know what happens to it. Well, I report these to FinCEN, and I never know what they do with them either. It's a very private situation. All suspicious activities, unless they are, or items, unless they're resolved satisfactorily, have to be reported under the Bank Secrecy Act, and we report them using a SAR. So what requires SAR reporting? Arch, you asked earlier what the level was. So a transaction requires reporting if it hits both of these items. First of all, if it involves an aggregate of funds or other assets of at least $5,000. And if you think about it again, how much are our mortgages? They're not below $5,000. They're not even close to that. So if you find mortgage fraud in any one of our files, it's reportable. And the second category, or the second thing that would make it reportable, is that if we know or suspect, or we have reason to suspect, that any part of this or a pattern of the transactions is a part of this, is either a part of money laundering or terrorism, contains any form of misrepresentation or fraud, or it contains any activity that could be classified as mortgage fraud, then it's reportable.
So we want you to be careful what you say. As we've stated, suspicious activity reporting is confidential, and it's not because we're saying it's confidential, it's because the government says it's confidential. We may not report it publicly, so with all the wonderful Marty reports that are generated, you will not see a Marty SAR report.
Or any other type of SAR report. We can't share the information internally except in a general way for future training, like what we're doing today.
We're not going to ever confirm that a SAR was filed or if an incident was reported. And you personally may not tell anyone you filed a suspicious report with compliance.
Okay, so what I'd like everybody to do at this point is type into that little type pad at the bottom so that I know you're there and listening, the initials BSA. So just type BSA. Now I'm going to unmute at this point. I'm going to ask if there's any questions, and also if anybody is not connected, if they would simply let me know and acknowledge that they're on, we'd appreciate that. Okay, you're all unmuted, and we do have a couple of people that joined us in midstream. Anybody who is not able to type into the type pad?
I'm not able to either.
I'm not able to as well.
And this is who? I need a name.
Dave Lowry.
Oh, hi, Dave. I can see that you're on.
Miriam is
Oh, wait a minute.
I'm getting some interference. Miriam, I think that was you saying you couldn't sign in, right?
yeah, I was trying to sign in.
Okay, gotcha. I'm hearing somebody's dog in the background, so I'm going to mute it again in a moment. Any questions before I do that?
Okay, how can I sign in? The VSA?
Well, you're actually in on the call now. You're just not getting the video. So what we'll do is we'll send you the presentation separately.
Okay.
And this is Miriam
Levy, L-E-V-Y.
Okay, great. Thank you, Miriam. Any other questions? Okay, I'm going to put you back on mute, and we're going to try to get this finished. Okay. Oh, Judy, we can see you. Okay.
Laura has a question.
All right, hold on just a moment. We have a question coming in. Is that tiny? Whoa, no, wait. Where did it go? Shoot. I'm sorry, we'll get back with you in just a second. I just made something disappear, and let me go ahead and finish the next section, and then we'll be right back to you, okay? So be very careful you don't tell anybody. Here's how you actually do assistance with any suspicious activity. If there are any suspicious issues, you can direct those to compliance@resmac.us. That's our shared email box. You can call me or Christina directly as well for assistance. And we also have an additional person, Marianne Hars, who has joined the department recently, and we haven't updated this presentation, so we need to add her on. Any of us can assist you in figuring out whether something needs to be further investigated or if we're having an issue with it. If you have, or once you have, a confirmed suspicious activity, you need to confidentially send your report to me, to the compliance officer, directly to my email, which is right there. And there's also under resources, there's a suspicious activity reporting form that you can fill out, or you can just email. This is what the form looks like, and it's found on our website under forms. I know it's hard to see, guys, so I'll just tell you what it does is this just gives you a blurb about what to report. It gives you the date up here. And a lot of times, if you can just use this as a guideline for email, because I'm really not into you killing trees and filling out forms. So we did this so that we have it out there, but you can actually just put the pertinent information in the email. This part here identifies the borrower, the loan number, assuming there is one, the status that the loan is in, whether it's in processing, it's in underwriting, closing, God forbid, something like that. And then below that is the reason for the referral, this section here. This information is your information, which if you email me, your email is going to capture that for me without you having to fill anything out. Right below that, it says you can attach documents. Now, if they've already been uploaded somewhere, you can simply tell me where they are. If they're in your point system or whatever, you can point me at that. And right at the bottom of the form is my name, my phone number. It's actually my cell phone, so if you need help, you can reach me pretty much anytime. Please don't call after 9. And my email. And that's how basically that's what needs to be on a reporting. You send me an email, just indicate that you are doing a suspicious activity report for me. So again, the suspicious activity reporting form is posted under forms on the ResMac website. You can utilize that if you really want to, or you can just put the information into the email. The official anti-money laundering program is also located on the website. I believe the one that's there currently is actually last year's. We're waiting for them to upload the current one. It has been slightly updated, but it's out there if you really want to read that. And this presentation will be out there within the next couple weeks as well.
So remember, if you think it's wrong or you feel something is wrong, trust your gut, trust your feelings, do a little bit more research on it. And once you see or know something, you cannot just ignore it. Please refer any suspicious items to your manager, again, if you think that they are not aware of it already, or directly to compliance. We will be happy to assist you in investigating and looking into it further. It's not official at that point. We're just kind of helping you out with a second set of eyes.
Yeah.
Please report your suspicious items once you have confirmed them to the compliance officer, who we've all discussed with Jeannie. And all of these steps help to ensure ResMac produces quality, good loans and stays in compliance with federal requirements.
It's so important for you all to understand that we rely on you to be our eyes on the other side. We can't be in your office and see everything, so we need you to help us. If you're in a management role, we need you to make sure that your staff understands if they have something suspicious. It's not something to be ignored, swept under the rug, or hope it just goes away. It's really, truly something that from a federal compliance standpoint, we must investigate, and then you turn it over to us. And whether or not we report it is in our hands. If you contact me and say, hey, that report that I filed with you, did that ever get reported as a SAR? You're going to hear crickets. Basically, I'm not going to be able to respond to you any more than the FBI will respond to me as to whether they are training or not. Okay, hold on a minute and let me get the control back. Now I can see you all. Let me ask you, before you hang up, we had a couple of questions. Can a gift donor redact all except the last 4 digits of their account? The answer on that is no, they may not. That is an altered document. And while it wouldn't rise to the level of we'd have to report it as an altered document, because I get why they might want to do that, They truly cannot do that. They're not allowed to do that. We would reject it because of it being an altered document. So that was a good question from Lori. Thank you. What we will be doing shortly, I'm going to unmute you in just a moment to see if there are any questions. What I will be asking people, we're going to be sending you an email within, an hour maybe of finishing this. And it's going to have at least 3 questions on it. We would like you to complete that and send it back. It will be coming from Christina Griswold, so watch for it. If you have multiple emails, I would suggest you take a look in your ResMac email. It might be there. And make sure you answer back. Once you've answered back, then you've completed the training. And what you will be getting from us is a lovely certificate suitable for framing, should you choose to print it. Not that we encourage that because we don't like people killing trees, but you can if you want to. And it indicates that you've completed the training. Also want to let you know that next month's, or actually this month's training, later this month, will be on fair lending. So we're going to a annual, every month you're going to get a training. So you can look forward to that. Maria, I'm not getting into answering underwriting. Maria had a question. You didn't see it on here. Can we reconfirm that a cousin can give a gift? Depends on the particular program definition. That's actually an underwriting question. I would encourage you to submit that to underwriting@resmac.us. Okay. And let's see, any other questions not on here? Let me unmute just for a moment to see if there's any questions. And if not, you all are free to go at this point. Any questions? Alrighty, we appreciate you joining us and taking the time so that you do wonderful, more good loans for us and keep honest and all that good stuff. Watch for your email, and we'll be watching for your response back. Thanks so much.
Thanks, everybody.